Hello and welcome to the weekly market metrics. I'm your host Sandeep and we are in week 1 of the year. And yes, with that 2026 arrives. I hope you all have your resolutions written up on your walls. Personally, I choose a different strategy for 2026. I would have monthly goals instead of yearly. If I cannot do something consistently for a month, what sense does it even make to think about yearly goals? Anyways, over to markets. 2025 marks a decade of positive returns on Nifty, something we have not seen since the index's inception in 1990. That's quite something, no? It reminds me of this 2024 article in FT by Tim Harford, where he describes the market as being run by Loki, a Norse god of mischief who makes the price zigzag wildly to trick you. However, Odin, the All-Father and another Norse god, has set a rule. Over any 30-year period, Loki must deliver an average return of roughly 7 to 10%. In the article, Tim goes on to explain why that works. Maybe you will like it. I will share the link in the show notes. Back home to our markets. Well, we made a new all-time high this Friday. The last trading day of the year started with a good uptrending move, with the index up about 191 points or 0.74%. That uptrend continued to the end of the week, marking a 286-point rally. Remember in the weekly market metrics week 51 episode I spoke about Santa rally? Well, it did play out as expected. 26th December close was at 26,042 and this Friday closed at 26,329, an up move of 287 points. As they say in Hindi, Bhagwan ke ghar der hai andher nahi. With that, let's check the charts and see how the price action played out. Now, since this is a month and year-end episode, we will look at how December and the year 2025 fared. We'll also look at what is possible in the coming week. I have a lot of things to talk about, so better get your chai or coffee. As always, Nifty first. Let's start with the Nifty yearly chart. For 10 straight years, Nifty has closed in green, giving positive returns every single year. From 2016 to 2025, Nifty is up 229% in absolute terms. Also, look at the same chart on a logarithmic scale. You'll see a much smoother, more consistent uptrend. Log scale matters for long-term analysis because it shows percentage growth, not absolute points. It helps you see real growth over time without recent years looking bigger just because the prices are higher. I'll explain log scale in detail and why it matters in a future video. As always, after seeing these charts, I decided to look deeper. I analyzed Nifty's yearly risk-adjusted returns. It's a simple metric, calendar year return divided by maximum drawdown of that year. This shows us how much return Nifty delivered for every unit of risk taken. The mean risk-adjusted return is 1.64 while the median is at 0.93. Showing that a few strong years drive the average. In the table, as you can see, 2017 was a standout year. Massive returns with minimal drawdown, best risk-adjusted performance so far. 2021 and 2023 also delivered strong returns with controlled risk. On the flip side, 2020 had decent returns but extreme drawdowns. 2025 with 1.21 is above median but below average, so it's kinda okay-ish here. So what's the takeaway? Well, returns matter, but how much pain you take to earn them matters even more. Now let's look at Nifty's monthly seasonality chart. December is a historically strong month, yet this time it closed in red again, making it 3 out of the last 4 Decembers in the red. Now we move into January. January is one of the weakest months historically. The lowest win rate at 41% and a negative average return. Even more interesting is the fact that out of the last 7 Januaries, all have closed in red. That's some consistency. So will the same streak continue or do we finally see a green January? I'm leaning towards a green close this time. But you all know my track record with predictions. Maybe the year changes and so does my luck with predictions. Let's see. Moving on to the weekly chart on Nifty, we finally saw a new all-time high this week. Nifty broke out of the 25,700, 26,200 range and closed at 26,329, decisively above the previous high of 26,325. For the week, it gained 286 points, up 1.1%. With the price at a new all-time high, there is no overhead resistance. On the downside, 26,300 is the immediate support, followed by the week's low at 25,878 and a deeper support zone near 25,700. On the daily time frame, Nifty printed 2 red candles on Monday and Tuesday, followed by 3 green candles from Wednesday to Friday. Among them, Wednesday and Friday were strong, decisive candles. On the downside, 26,300 is the first support, followed by 26,200 and then 26,000. With price at fresh highs, there is no resistance on the daily chart as well. Now moving on to the hourly chart, Nifty stayed below the 50 EMA until Tuesday. After that, on Wednesday, price moved decisively above it and stayed strong. Currently, the gap between the price and the 50 EMA is 216 points or 0.83%. The hourly chart bias remains strongly bullish, supported by Friday's solid close and Nifty ending the week at a fresh all-time high. Talking about Nifty's expected range into the coming Tuesday, that is 6th of January expiry. Based on options data, the ATM straddle closed around 133 points, slightly up from 128 points last week, indicating lower expected volatility. With Nifty spot closing near 26,329, the implied expiry range comes to, on the upside, 26,329 plus 133, which is 26,464. And on the downside, 26,329 minus 133, which is 26,196. Now looking at the open interest data, on the put side, 26,000 put and 26,200 put and 26,300 put hold the highest OI, indicating strong support in this zone. On the call side, 26,500 call has the highest open interest. This level also aligns with the range projection, making it a key upside reference. Notably, there has been heavy call unwinding at 26,200 and 26,400, reducing immediate overhead pressure. The 26,200 and 26,500 zone is showing up repeatedly across multiple analyses, making it a critical area to track. That said, in a highly liquid contract like Nifty, OI can shift rapidly. This data reflects current market positioning and not a guaranteed outcome in future. Now moving on to SENSEX, as we looked at Nifty's yearly returns, so I thought why not compare it with that of SENSEX and see which one actually outperforms. Even though all SENSEX stocks are a part of Nifty with slightly different weights, Nifty has 20 additional stocks. So over the last 10 years, Nifty has outperformed SENSEX 6 times. More importantly, in the last 3 consecutive years, Nifty beat SENSEX with an average of 1.12% higher yearly return. Now what does that tell us? Most likely the additional 20 stocks in Nifty have contributed more to the returns and driven the outperformance. If you know a more precise reason, do let me know in the comments. I would love to hear your take. Moving on to the weekly time frame on SENSEX, it added 721 points or 0.85% to close at 85,762. The weekly range expanded compared to the last 2 weeks, though SENSEX is still around 400 points or 0.46% away from its all-time high. Resistance is at the all-time high of 86,159 and support is at this week's low in the 84,500 zone, followed by 84,200. Talking about the expected range for SENSEX till Thursday, 8th of Jan, the ATM straddle closed around 626 points, almost unchanged from last week's 621 points. With SENSEX spot near 85,762, the market is pricing in an expiry range on the upside of about 86,388 and on the downside 85,136. That's the expected move for the week as per options pricing. Moving on to Bank Nifty now, if we look at the monthly seasonality table, December closed in red at minus 0.29%. January is historically a weak month with a 43% win rate and a minus 0.63 average return. Now, after 3 consecutive red Januaries from 23 to 2025, the big question is, do we finally get a green January in 2026? My bet is again on a green January close with Bank Nifty at fresh all-time high. Momentum is clearly strong and the strength could carry forward into 2026. On the weekly time frame, Bank Nifty gained 1,140 points, up 1.93%, and closed at a fresh all-time high of 60,150. This week saw the highest range in the past 10 weeks. Key supports are placed at 59,000 followed by 58,800 and 58,600 zone. With the price at new highs, there is no immediate technical resistance. Talking about Bank Nifty on a daily time frame, 4 consecutive green candles and a strong Friday close at the all-time high keeps the momentum bullish. Immediate support lies at 59,500 followed by a deeper support near 58,700. On the 1-hour chart, Bank Nifty crossed above the 50 EMA in the second half of Tuesday and stayed above it till Friday's close. The gap between price and 50 EMA is 637 points or 1.07%. The price action clearly points to a strong bullish sentiment. Now over to Midcap Nifty's monthly seasonality, the picture is very similar. January is the second weakest month historically, just a 40% win rate and an average return of minus 2%. Let's see what this year has in store for Midcap Nifty. Moving on to rate of change, we are in the first week of 2026 and we are off to a great start with all indexes in green. Bank Nifty gained about 1.93% for the week, followed by Nifty Mid-Select at 1.9% and then Nifty at 1.13% and SENSEX trailed at 0.85%. Talking about the top sectors this week, metals continue to shine. It's been 6 weeks now, and this week the metal index was up 5.7%. Like I said last week, maybe 2026 is the year of metals, you never know. Nifty Commodities and Nifty CPSE continue from the last week, both up about 4.3%. There are 2 new entrants this week with Nifty PSU Bank up 5% followed by Nifty Auto at 3.8%. That's about it for the sectors. Now moving on to range and expiries. Nifty printed its narrowest range on Thursday, 1st Jan, followed by the widest range on Friday. The same pattern showed up across Bank Nifty, Midcap Nifty and Sensex. A tight Thursday followed by an expansion on Friday. As a result, Nifty's 5-day average range jumped to 162 from 122 last week. Clear range expansion after compression. Now let's talk about Nifty expiry. Tuesday's Nifty monthly and quarterly expiry saw an extremely narrow 99-point range with the at-the-money straddle opening around 80 points. The index chopped multiple times within the same range, making position management difficult for option writers. Despite the narrow range, the very low premium created an unfavorable risk-reward situation for option traders. Thursday's Sensex expiry stayed in a narrow 350-point range. The at-the-money straddle opened near 242 points, making it look difficult for option writers. But the low premium reflected low volatility. Despite intraday chop, the expiry was smooth and manageable, turning into a great day for option writers and a strong start to the year. Moving on to India VIX, it ticked up 3% to close at 9.45. With the union budget just a month away, volatility is likely to pick up. I'm expecting VIX to rise in the coming weeks. Let's see how it plays out. Moving on to commodities this week, on a YTD basis, silver was on top at 154%, then we had gold at 63% and lastly copper at 51%. Crude oil and natural gas were negative at minus 10% and minus 16%. Talking about the current week, copper is leading at 2.3%, then we have silver at 1.5% and crude at 0.2%. Gold and natural gas are in red at minus 2% and minus 7% respectively. I have been talking about keeping a short bias in natural gas for a while now. I hope you've been following it. Talking about metals, I have an interesting read for you on copper, which I'll share later. I think maybe in the commodity supercycle, it's copper's turn right now. So, in short, the markets kicked off 2026 on a strong note with Nifty and BANKNIFTY ending the week at fresh all time highs, supported by expanding ranges and improving momentum. Volatility has picked up after midweek compression visible across all major indexes, while option implied ranges remain modest, keeping premiums low and risk reward selective for option sellers. Bank Nifty and metals led performance, signaling leadership from cyclicals, while broader participation stayed measured. VIX remains low but ticking up, and with key events like Union Budget approaching, conditions are slowly setting up for higher volatility in the days to come. Overall, the tone is bullish but contained. Momentum is strong, and as always, risk management remains key as the year unfolds. Moving on to what caught my attention this week, well, I came across this chart titled 2025 Cross Asset Winners and Losers. Guess it's from a report published by Merrill Lynch, now a part of Bank of America. It shows returns from across assets and across markets for the year 2025. As you can see, India equities lagged at 21st rank, with Korea equities leading this year. When it comes to sectors from an ACWI, which is All Countries World Index, banking was top, similar to what we saw in India. In commodities, it was obviously silver that stole the show. Talking about metals, I came across this CNBC US article about copper and its positive outlook for 2026. It's the AI-driven demand and the supply constraints that's leading the up move. Must read if you want to take a bet on this metal or related stocks. Lastly, a very relevant post by Nick Majuli from the Of Dollars and Data blog, who has this year-end post titled Pray for Beta, Not Alpha. Now, as a strong believer in passive investing for capturing beta, I completely agree with Nick. Nick also says it's better to focus on things in life like career, savings, and health, where we have better control on things. At the same time, as someone who has been active investing and trading for decades, while I agree with Nick broadly, I also think if markets interest you, there are indeed ways to create a layer of alpha while you're doing all that Nick asks you to do. So I think it boils down to what interests you. Now, over to what to expect in the coming week. Well, next week is a full 5-day trading week and there are no major events lined up. Talking about the markets, the overall sentiment remains strongly bullish. On the commodities, it's worth keeping an eye on copper and Nifty Metals Index. And with that, we wrap up this week's and the first weekly market metrics for the year 2026. If you find this series useful, don't forget to subscribe to this channel. Until then, stay curious, stay steady, and enjoy your weekend.